We welcome all our viewers from around the world to today's edition of Money Moves. I am Bosin Amafaye. We're live at the FMDQ studios in Lagos.
I am Melissa Enoch. It's Wednesday, August the 20th, and we thank you all for joining us on the show.
Let's get the show started in Ghana, where the Ministry of Finance today announced a statement that the payment of another coupon under the country's domestic debt exchange program has been paid. Ghana says the total amount paid for this obligation stands at 9.698 billion cedis, which brings the total disbursements under the local debt program in 2025 alone to 19.4 billion cedis. The Ghanaian government assures investors the subsequent obligations, including the DDEP program, will be honored fully and on time. Well, in East Africa, the Kenyan government is considering the splitting of its iconic telecommunication giant Safaricom into 3 separate entities. The new entities will cover telecommunication business, tower operations, and M-Pesa payments platform. Kenya's Treasury Secretary John Mbadi says an initial assessment indicated a huge benefit from the Safaricom breakup, which will allow the business to operate more efficiently. Now let's turn over to Melissa for more news now on today's show. Hey there, Melissa.
Hello there, Bosin, and thank you very much. In another news about Kenya, the president, Dr. William Ruto, says the economy is proving resilient despite global headwinds due to higher U.S. tariffs and trade disruptions. President Ruto was speaking at the Kenya Investment Forum, a sideline event held on Tuesday at the ongoing Japan-Africa Trade and Investment Development Summit in Yokohama. Let's now take a listen.
Japan is today Kenya's 3rd largest source of foreign direct investment, contributing over $205 million in 2024 alone. This investment is feasible in transformative projects such as the Mombasa Port, the Olkaria geothermal plant, and the automotive assembly infrastructure in Kenya. Today, there are 120 Japanese investors operating in Kenya across diverse sectors, from manufacturing and infrastructure to renewable energy and various technologies. They are part of a growing network of businesses that see Kenya as a gateway to African market and a trusted partner in investment and growth. Our trade ties are equally strong. Bilateral trade reached $900 million in 2024, an increase of 33% from the previous year. Japan remains Kenya's leading source of motor vehicles, while our exports ranging from titanium and copper to tea and flowers demonstrate the wide opportunities available in our markets.
In the meantime, Japan and Kenya have signed a yen-denominated long-term sheet backed by the Nippon Export and Investment Insurance. In South Africa, the country's headline inflation races to 3.5% in July, against a lower 3.0% reported in June, the Statistics Office reports this week. The Statistics Office says on Wednesday that the consumer prices rose to a 10-month high in July, reducing the chance of another interest rate cut when the South African Reserve Bank policymakers meet next month. SARB Governor Leseja Kganyago said that earlier this month that he expects inflation to pick up in the coming months before returning to around 3% in the medium term. In other news now, the Cameroon's president has authorized the Minister of Finance to borrow up to 930 billion CFA francs, or roughly $1.6 billion, through local and foreign loans. The financing package, comprising of 350 billion francs from Treasury bond issuance, 250 billion francs from local private lenders, and 330 billion from international banking firms, will be used to fund development projects and settle contract arrears. Cameroon is struggling with slow disbursement of external financing and revenue mobilization challenges, particularly from non-oil collections. In energy news now, the African Development Bank, in partnership with the Climate Investment Funds, has launched the Gender and Renewable Energy Country Diagnostics in order to strengthen inclusive climate solutions across Africa. The initiative will cover Ghana, Liberia, Mali, Lesotho, Madagascar, and Malawi. The program highlights opportunities to integrate gender into national energy strategies, promote inclusive financing models for women-led enterprises, and increase their participation in the clean energy economy on the continent. Finally, on News Now this Wednesday, the South African Reserve Bank announced on Wednesday the winners of its Monetary Policy Schools Challenge for 2025. Students across South African secondary and tertiary schools participated in the challenge that features presentations on the policies of the central bank. Let's hear more from the SARB Governor, Esenja Hayango.
The MPC Schools Challenge is now in its 13th year and has grown to over 460 schools countrywide, reaching nearly 2,000 learners. This challenge is the SARB's flagship social investment program targeting grade 12 learners. Our intention is to shape the minds of future economists, policymakers, academics, captains of industry, and leaders by enhancing their understanding of monetary policy and the role of a central bank in the economy. It is more than just a competition. The learners are exposed to the inner workings of the Monetary Policy Committee and are provided with a lot of economic data and information which they must use to effect monetary policy decisions. It is also our way to encourage them to pursue a career in economics, policy making, and finance more broadly. Let me remind you how this competition works. Matriculants from across the country who study both economics and pure mathematics are eligible to participate in the challenge. They are given the opportunity to put classroom theory into practice by setting up their own monetary policy committee, which is modeled on the SARB's monetary policy decision-making body. As I mentioned earlier,
I am Melissa Enoch, and that's it on News Now. Stick around for our markets round with Bolson at the ticker tape room just after the break.
I am Bosun Amafaye, and we're back with Money Moves now on the markets, tracking today's trading day, starting with equities as always. And you can see the correction across many African equities markets, continuing to where we started on Monday for the month of August. The markets that gained very rapidly towards the end of the second quarter, the start of the third quarter, now begin to retrace. Look at the table from the top. You see the Nigerian NGX Osha Index down today by 0.73%. Now the Osha Index is trading back towards 140,000 level reading. The BRVM also fell today by 21 basis points. The EGX market pulled back very strongly by 1.02%. South Africa market now holding the tail end of 100,000, down by about 0.25%. We had a couple of green shoots, however. The Zimbabwe stock market at the bottom of the pile was about 0.37%. Semdex in Mauritius up by just about 3 basis points. And of course, you've got the Nairobi stock market, Osha Index 167.75, up by roughly 1%. The market in Morocco was closed today for the anniversary of the revolution of King Mohammed and the people. So the markets there will reopen tomorrow, Thursday. It's been a very choppy week so far in Morocco, with the Casablanca stock market down on Monday as well as Tuesday, the third trading day today. Let's move on to the government bonds, looking at the 10-year paper, and the yields coming up for the South African 10-year paper, 9.605, around 1334 GMT today. That's index. That's a paper down by 0.47%, around flattish end for the Kenyan market. 10-year paper printing around 13.53%. Of course, Morocco about 2.8%. Mauritius 10-year paper around 3.35%, according to investing.com data. Let's bring in the currencies. Yesterday, we saw the US dollar making a bit of a comeback, pressure on Tuesday on oil prices and gold prices as well, on the peace talks being going round around Russia, Ukraine, President Trump, European leaders, and everyone else in between. Of course, the meeting is likely going to take place. No one is sure when that will happen or if it will happen. Russia doesn't sound to be very optimistic about a face-to-face meeting between President Putin and, of course, President Zelensky of Ukraine. So that is in focus. Therefore, so the currency, the rand, taking a bit of the upside. We're looking forward to also hear from the Jerome Powell, the U.S. Fed chairman, later this week at Wyoming on the Jackson Hole conference, to give a further direction how the Fed will most likely decide in September, the crucial monetary policy meeting for central banks around the world. So the Egyptian pound lost about 0.31 to the dollar. The CFA franc West Africa finished was trading 563.24, 0.31% also on the USD. The dollar took about 0.02% on the Kenyan shilling. The Moroccan dinar was trading 902 on the dollar, and the Nigerian naira 1,535.04. 0.20% downside for the local currency on the US dollar as well. However, the rand recovered about 0.02%, very gentle upside at 1769 against the American greenback. Now, let's push all of this now into the commodities space as we start with oil prices. Of course, we see a little rebound. These oil prices are still trading, these benchmarks, the WTI and the London Brent are still trading well below the year high, as you know already, 66.49, 63.10, around 1302 GMT, 1.06, 1.20 for the US oil. The eye on U.S. inventory, and of course, most likely a peace deal, or at least a ceasefire, as it were, between Russia and Ukraine in everyone's crosshairs. Gasoline's trading about $2.10 per liter. That's about 0.59% to the upside at about 1302 today. The market, these are futures prices, so the market's not closed yet. Let's move very closely to look into the metal prices. The king of metals, gold, trading 3,386.3 an ounce today, 0.82% to the upside. The market is beginning to see the safe haven status back into the bullion, the yellow metal. Also, copper riding on that. President Trump announces, of course, you've got a 50% tariff on metals or copper that's coming to the United States. Now, President Trump quietly pushing for additional tariff on metals and aluminum and every other product that uses metal that will be coming to the United States. That's also a cause of worry. So there you can see how the market is reacting to that. Platinum are now trading 1,340. That's 2.14%, a single biggest day jump since we started the week. That's around 1307 GMT as one of the basic resources. Aluminium down about 0.78%. It's one of the products that will be hit by President Trump's latest tariff hike. And you have the iron ore 101.57. Let's sum it up, bring it all to a close around the soft metals place with cocoa prices, 8,108. There are concerns about output expected out of Côte d'Ivoire, the world's #1 cocoa exporter, 0.73, a bit of a deceleration in prices, not so strong. Weather conditions expected to impact output out of Ghana and Kenya in terms of precipitation that the meteorological office in Europe is talking about in Côte d'Ivoire, whether that will help the market with the dry season extending in that particular country. Coffee prices now sticking around $300. $352.95, 1315 GMT. That's a very strong 1.12%. Brazil is one of the world's largest producer of coffee bean, by the way. Then you have Vietnam, between Arabica and Robusta coffee, between these two countries. Then, of course, the market's moving that up. So coffee prices now getting a bit elevated. Go to the bottom of that dashboard and look at the price of sugar. That's a very massive upside, 1.84%, $16.61. That will flow into any other commodity that is using sugar. Then, of course, cotton prices up also by 0.31% at about $67.77 today. These are futures prices, by the way, so you want to keep an eye and see what the rest of the market looks like. You can keep an eye here on Frontier Africa Reports. That's your Money Moves Wednesday, the 20th of August. I am Bosin Omofaye from me and the rest of the team. We thank you for watching the show. I'll see you again tomorrow.